Let's quickly consider few case studies that we bring into understanding the danger of inadequate control measures. Adopter Limited was a company that is into big time production, which requires them to consume a lot of diesel per month and per year on per year basis. So in a particular year, they discovered that though the prices for diesel is still the same as it was the previous year, their cost of overhead on diesel went up with about 60%. So an investigation was launched, like how do we dictate what is the reason behind this. They later discovered that due to lack of segregation of duty between the purchasing department that purchase that purchased the diesel and what should have been like a control measure, maybe a verification department, a department that verifies and receives it. There was nothing like that. It is usually a ball game of the of the purchasing department alone. They were the one in charge of verifying the quantity that the vendors bring. So there was collusion between some staffs of the purchasing department and the vendors that supply, to the extent that sometimes when they request for as much as 50,000 liters of diesel, they end up bringing 15,000, and the money for the 35,000 extra goes into fraud, being shared in between the purchasing department staff and the vendors. So from this, all this fraud could have been avoided if proper control measures was in place. If right verification process was in place to verify the quantity supplied and benchmark it or verify it as against the quantity requested and make sure that it is accurate. This shouldn't have been or should never have been the function of the purchasing department in the first instance. So they failed in the place of segregation of duty. Another case is the case of Ozum Energy flight charter fraud. A particular top executive in the Ozum Energy, this is one of the African countries, I think South Africa or one of the big African countries, but not Nigeria. Ozum Energy, one of their top executives, kept sending fraudulent flight charter tickets to the accounting department, and they always pay. Nobody questions what about flight ticket. Nobody asks what training did you go for. Well, because for the executives at his level, he has opportunity to fly on chartered flights for meetings outside the country and within the country. Because this is expensive and because there is no proper segregation of duty or proper verification system or proper general internal control measures, he started exploiting this loophole. So along the line, a new finance manager was employed, and when he saw like 3 of these, he decided to look into it. That this man, when he had been seeing him in office for the past 2 weeks, and just last week he brought another charter flight invoice of this amount that he went to an European country. When did he travel? So he escalated it to the internal control department. In fact, in the first instance, the internal audit department should have been in the know of something of such significance that is maybe they sign off or they verify that which meeting did you go for, who approved it. There should have been an approval of such thing. Maybe the MD approves whatever. The buck should not end on anybody's table. Even the MD, for some particular things, he has to make recourse to the board. But in this case, they failed in the segregation of duty, in their approval, in their authorization, putting the right authorization measure in place, and they suffered for it. He has really milked real money out of the company before it was discovered. In Nigeria, there was a POS fraud in a big Nigerian mall. A collusion of staff just decided to bring in their own POS at the cash counter, and they circulate it around, and people, when you punch in, when you swipe with your card, you are not paying into the company's account, you are actually paying into their own secret account, because of course you can't differentiate between the company's POS and the fraudulent staff's POS. It went on for like 6 months before it was discovered. It was actually with the help of a customer who saw the alert and has always been seen. He knows what the name of the mall is. Now saw the alert that this is a different company, and during the, I think maybe he had a problem with the amount. They mistakenly bill him higher or something than what he actually bought. That was when he looked closely into the alert that he got, and he escalated it to the management. That was when they discovered that, okay, there could have been restriction on the number of POS on the floor, or each staff's POS could have been attached to his own point of sale, could have been attached to his own system, so that you can't even just carry POS all around. Because sometimes you go to this mall, you will see POS from table 1 being passed to table 2, being passed to table 3. Before you know it, you don't even know which POS belongs to who. So these are control measures. There could have been a floor manager that is saddled with the responsibility of overseeing what actually goes on the floor. And again, that means this mall, they don't engage in proper reconciliation, timely reconciliation, to detect if there is fraud. That means this went on for like 6 months according to the story I heard. If they are doing weekly reconciliation, or monthly reconciliation, they would have seen that the amount of cash received doesn't tally with the amount of goods that has been going out. So these are case studies of failed control measures and what? And the implications. So we can see now that the failure starts from where? From the prevention. They didn't consider all the elements that could have resulted into fraud and anomaly. They didn't consider it. They didn't put into perspective that, for instance, now that if they didn't separate the power and segregate duty of who requests for diesel and who gets it delivered, who ensure that the right quantity is delivered, there could have been a collusion between the purchasing department and the vendor. Here, they didn't put in place right verification, right authorization measure that ensures that somebody, an executive, a top executive, just doesn't bring anyhow flight ticket and call it a flight chartered, even when he had not been out of town for months. In this case, they didn't put right they didn't put right detective and even right preventive measure in place. For instance, if they've ensured that the access to POS is restricted to one cashier per one POS, they would have prevented a whole lot of mess. That is, you password each of the POS and is attached to a particular cashier. It's not like you just pass it all around, and at the end of the day, you don't even know when you are using the wrong POS or the fraudulent POS. And if they put this, if they put this, control measure of restrictions of access, one per staff, this preventive measure could have easily helped them to detect who perpetrated the fraud. That's why we said when the preventive measure is sound, it will be easier to engage in detection when there is even fraud at all.